Top-down analysis is by far the best way to trade. It gives a full understanding of the big picture of the market and allows you to see agreement across all time frames before you start to take trades, meaning it gives you the most accurate, high probability and high reward setups. So how does it work and what is the best top-down analysis strategy that you can employ right now? That is what we're going to talk about in today's video. All right, so first off, what is top-down analysis? Well, top-down analysis is simply the process of analyzing a market from the higher timeframes down to the lower timeframes. So we go from the top down. Now, it gives you the highest accuracy setups because when we trade with a top-down approach, we basically make sure that the high timeframes and the low timeframes and the economics as well have the same exact agreement on the trend. So we're not going to be trading where there's conflict between the daily and the hourly time frame. We make sure everything agrees, we build the big picture, we build the medium picture, the smaller picture, and execute upon that with total agreement across every single basis of trading. So here is an example of what the top-down analysis process would look like. The ideal top-down process would start with economics, and then once we have a macro backing, an understanding of which of the currencies we're looking to trade or which of the assets is the strongest and the weakest, that will be the first basis for our trade. When we understand the macroeconomic flow, we will then look at the high timeframes. So this is around the weekly and the daily timeframes to just identify the direction of the trend. Then we go to the medium timeframes to actually start formulating a setup. And then we go to the low timeframes, and that is actually where we find the setup, finalize the setup, refine the setup, and execute. So we start over in the realms of fundamental analysis and we work all the way down from the top down to the bottom and get that really solid, high accuracy, high reward trade. So without further ado, let's jump over to the charts now and I'll show you a real example. Okay, so here we're looking at USD JPY and this is the weekly time frame. Now this is a trade that I actually took with my team inside of my course community. This theory is grounded in reality and is not just hindsight trading. All right, so getting into the work then, the first thing I said is we should be thinking about the economics and the fundamental analysis. Well, at this point in time, we are looking at the US dollar versus the Japanese yen. And at this point of time, the US dollar was appreciating against the yen massively because the Federal Reserve, the US central bank, was aggressively raising interest rates. This brings the yield on the dollar up and makes the dollar an attractive place to park money, so a lot of money outflows from elsewhere and flows into the US dollar, pushing the US dollar values up. Now, at the same time as the US raising interest rates, the Bank of Japan had stayed with negative interest rates at minus 0.1% because they are actually trying to do the opposite. They're trying to raise inflation. This means there is a negative yield, so people don't like to hold money there unless they really have to. So from this correlation, we can see there's a lot of demand in the US dollar, there's very little demand in the yen. So from a fundamental and economic perspective, the US dollar should go up against the Japanese yen. Now, once we have that fundamental picture in mind, we are going to start on the weekly timeframes. And over here on the weekly, what we want to do is kind of build the trending idea. So at the moment, we can see the fundamental idea generally suggests we should probably be going upwards. Now on the weekly time frame, we can also see that the market is uptrending. Okay, we have these higher highs and higher lows, and even in the larger trend, we actually have a massive series of these higher highs and higher lows. So we have general direction pointing to the upside if we consider some demand zones, which is basically consolidation at the bottom of a large move, as you can see here. We traded into this demand zone and we pushed away. And what I can also see is that we're kind of forming this weak resistance. So the market is continually pushing it at these levels. And every time we hit this level, it becomes more likely that next time we hit it, we're going to break through. So we have a push, and a push. And we are now forming these kind of substructure, higher lows as well. So the lows in there, then we have this higher low. So the likelihood is we can push against this resistance and move through. Now, what I can also see over here on the weekly is that we do have a supply zone. So once again, consolidation at the top of a large selling move, that is a supply zone. And leading into the supply zone, we have what we would call an imbalance. And this is basically an open area in the market that hasn't yet been retested, which massively increases the odds that the market is going to pull through that at some point. So let's look over the general picture. We have the fundamentals suggesting the US dollar is going to go up against the yen. And now we have the high time frame idea suggesting also that the US dollar is likely to go up against the yen. So what we would do now is go down to the daily time frame and start continuing on with this idea. So the weekly and the fundamentals suggest we're going up. And if we look at the daily here, we understand we have this weak resistance. Now, the reason I really find it important to do top down is because if you just looked at this, you might say, well, we've reacted to this level multiple times. Maybe we should be looking to sell. But because we have the fundamental and the high time frame backing, we understand the right way to trade this is actually to look for a buy. So looking within this daily trend, we can see we came in lower low, lower high, lower low, lower high, lower low. Then we broke up to higher highs, higher low, higher high, higher low, higher high, higher low, and a higher high. So the daily trend at this point is actually pointing to the upside. And we can see once again that we've actually created this large imbalanced price move. Now at the bottom of the price move, we have the move that started it. That is going to be the demand zone. So we can mark our daily demand on just like this. So now we're really starting to build a picture for this trade idea. And generally at the moment, the picture I would assume is if we pull to this level, we can look for a buy. So we have the fundamental agreement of the USD JPY going up, high time frame agreement of USD JPY going up on the weekly and now the daily. So now we want to start going down to the actual criteria time frames, the 4 hour and the 1 hour, to identify an actual trade execution. So jumping to the 4 hour doesn't really tell us much. If we go down to the hourly, we can actually see then that we have this nice efficient range of demand, push away, pullback, retest, demand, push away, pullback, retest, demand, push away, and we haven't had the pullback and retest just yet. So this is going to be our kind of final demand. This is where we would expect the trade to come in from. And once the market comes into this level, we can then start to approach for buys. Now, what we could do here is actually just put a buy limit on, but if we want the highest probability of success, we would actually wait for a confirmation. So we would wait for the market to pull into this level and then actually give us an indication of a change in the trend. So here we've traded into the level, and now we have obviously the high time frame agreement, medium time frame agreement, and what we're looking for now is the low time frame agreement. So as I mentioned before, when we are doing this, we want to make sure that all the time frames agree. So we have the high time frames as bullish, the medium time frames as bullish. Now we need to see this lower time frame shift bullish by breaking structure. When we start to see new higher highs in this market, that will confirm that upside is likely to commence, and then we can start looking for an execution to actually buy this market. If we do this, we are waiting for full agreement across all time frames, gives us the highest confidence in our trades, highest accuracy in our trades, and also refining down here allows us to get refined entries, which means better entries, smaller stop losses, bigger targets, more risk versus reward ratio out of your trade. So the market has just pushed up and we've broken the structure just here. And now what we would ideally like to do is identify our entry point. Now for me, the entry point would be very clearly at this level, and this is where I executed from. You might be thinking, why would I not buy from here? Well, that is because of a concept called inducement, which I'm not going to talk about in this video, but you'll probably find mentioned somewhere on my YouTube channel. So now that we have the confirmation across all time frames, what we can start to do here is place our orders. And we can place our order on this hourly zone. We can put a stop below, and then targets wise, we can go anywhere. We could continue it for a massive swing trade. When I took the trade, I just targeted the highs again because it was very, very clear we were at least going to go and trade into this resistance point. And it was already going to be around a 12% trade at 1% risk anyway. So definitely worth going for, and definitely a nice trade to lock in. So now let's allow the trade to run out. After a bit of consolidation, we did see the market come into the entry, and after tapping us in, we made a very strong, fast run all the way to the target. So you've just seen there how we went from economics to the weekly time frame, to the daily time frame, to the 4 hour time frame, to the 1 hour time frame, to identify a super solid trade. And as you can see, that trade has now completed, and we've actually locked in nearly 12% on that position. And that is pretty much exactly the same trade that I took over with my community. And hopefully by this point in the video, you see the value now of top-down analysis. Because not only do we get agreement across all time frames, but by making our entry on the 1 hour here, we actually managed to get a refined entry, which doubles or more the risk reward we can get on the trade. Now imagine had we just entered from this level on a buy limit. Our risk versus reward would have been around 4.4. However, we managed to get 11.85 out of it because we actually went with this refined entry. So not only do we get higher agreement and higher confidence in our trades, but we can actually massively increase the reward we get from the positions we take. And the great thing about top-down analysis is you will have full confidence in your systems because you understand that the fundamentals, all of the time frames, they all agree with each other, and that is going to lead you into the highest confidence trades, which allows you to hold trades for long periods of time, such as this one, which was actually held for 400 pips. Now ask yourself, is it easy to hold a trade for 400 pips when you don't understand the agreement between the timeframes and you don't feel massively confident on it? Because for me, no, I cannot hold trades that long unless I have full confidence and clarity in the direction of the market. So I hope you found some value in today's video, and now what I want you to do is go forward to the markets and test this out. Test out this top-down analysis strategy. You can do that by backtesting first, so you don't have to risk any real money, and just give it a go and see if you can run this process from the high time frames down to the low time frames. If you want to learn my full trading strategies from me, just hit the link in the description and let me know in the comments what you thought of this video and whether this is valuable to you or not. Once again, I hope you enjoyed it and I look forward to seeing you in the next educational video over on my channel. So thank you for watching and I'll see you later.